welcome to Shadow of Truth, and today is Monday, April the 3rd, 2017, and your hosts are Rory Hall from thedailycoin.org and Dave Cransler from investmentresearchdynamics.com. How's it going today, Dave?
I'm having trouble getting going today. I'm grumpy. Everything's boring out here. The markets are boring. The news is boring. All it is just stupid political news in D.C. No one cares about it. And, everyone just thinks the market's going to go up forever. I saw a report over the weekend. There was a survey that was done of just your average retail investors, and 11% of the respondents thought that there would be 100% probability the market would go higher this year.
Well, 11% is a good measure, but thank goodness it's a small measure.
No, because the majority of the respondents thought the market was going to go up with a fairly high probability this year. I mean, we're back to this situation where everyone's convinced that stocks are a no-lose investment. I remember hearing that in 1999, and I remember hearing it in 2007.
Well, good luck with that thesis. Well, let's jump in. Well, one of the things that's happened over the weekend was China-Russia gold story kind of blew up.
Yeah, I noticed that. Well, Zero Hedge got a hold of it finally.
A couple of days after we had discussed it. Now it seems to be everywhere, but which is good. I mean, that's a good thing.
Right.
But I got the mint sales numbers, and they are back to once again being a little bit off. Gold last week, they only sold 2,000 ounces, and the previous week they had sold 7,000 ounces. And so for all of March, that's the total. It's 21,000 ounces, and versus 2016, they sold 75,000 ounces. And then silver, they finished the month at 1.615 million silver eagles versus 4.106 million in March of 2016. And the America the Beautiful, they only sold 200 last week. Finished April at 19,700 total. It's still down significantly, somewhere around, for silvers, between 65 and 70%, somewhere in that range, versus 2016, and then down about 75% over last year.
It doesn't surprise me that I don't know why people are surprised that coin sales would be down this year. I mean, you're talking about a very retail market, despite what some guys out there would have us believe about J.P. Morgan accumulating silver eagles, like they're going to pay a $2.50 premium per ounce when they can just buy all the bars they want. But if you look at the retail sales and you look at restaurant sales, it's obvious the average retail guy in the United States is running out of money or is out of money. I mean, more and more data is coming out that convinces me that our system hit a wall in November, December, and we saw that reflected in the holiday retail sales. And that's when you look at the actual numbers coming from the retailers, not the seasonally adjusted, not inflation adjusted garbage coming from the government.
Right.
In fact, in the latest short seller journal I published yesterday, I show a chart in there that I found that basically shows the economic activity in this country has been declining since the end of November. That so-called hard data versus the opium and sentiment data. So, and we're seeing it again with auto sales this morning. I mean, General Motors was projected to be up for the month something like 5 or 6% their sales. They were only up about 1.5% or whatever the number is. Ford was down 7% for the month, and Chrysler was down, I don't know, something like 5%. I don't know the exact numbers. I just saw them scrolling across the bottom of the TV screen. So, it's clear that the ability of the average consumer to take on debt that has hit a wall or is hitting a wall, and the disposable income continues to decline. I don't care what the seasonally adjusted numbers say. You got to look at the actual numbers and find sources where you can get actual data. And so it doesn't surprise me that it's translating into a big decline in minted bullion coins. I mean, it's an expensive item, right? I mean, it's about $400 now to buy a roll of Silver Eagles. It's $1,300 or $1,250 to buy a 1 ounce gold coin. I don't think the average American has that kind of money sitting around.
Probably not. The card sales. Wolf Richter published an article a couple days ago showing the incentives that the auto manufacturers are leveraging to their sales, and GM had the highest incentives at north of $5,000 per unit. And when you're giving away or you're marking down $5,000 a unit and your sales are still tanking, you have an issue. And as Jeff Nielsen and I were discussing in the interview that I just conducted with him, most people ask, when is the collapse going to happen? Well, it started in 2006, and then it went full bore in 2008, and now we're just getting to the remnants of the collapse. I mean, it's, most people I think are looking for a singular event. And as Jeff pointed out, back in 2008, all of the Mockingbird media were saying that no one saw this coming. We didn't. It was just from nowhere. And they're going to do the same thing again when this thing finally gets away from them. It'll be, this nobody saw it. Where did this come from? How did this happen? Well, we've been talking about it for 151 shows. So,
right. Well, and again, in 2008, they saved it from collapsing by printing money and making credit easier and more readily available.
And it didn't help.
And the narrative at the time was, oh, well, household debt is coming down. Well, the only reason household debt declined is that it reflected the write-offs that the banks took, that the government paid for, and that the money printing paid for.
Yeah, that we paid for. We are
circling back to the auto sales. Yeah, I've been drilling down pretty deep into those numbers in my short sellers journal the past several weeks. And actually, GM's incentives for their trucks are even more. They're as much as 10% of the cost of the vehicle. And I think if you see General Motors actually is still reporting a slight increase in sales for the month of March versus Ford and Chrysler, and I haven't seen the foreign autos, but I think there's still an implicit government backstop with General Motors, because General Motors I can't see how they're especially on the trucks, I don't see how they're making money by selling those. I think they're just trying to pump out volume and keep people employed, and I think it has to do with the sort of implicit government backing, because Obama bailed out General Motors in 2008. Yep. And I think the management there probably assumes they'd get bailed out again, right? The old saying used to be, as goes GM, so goes the country, which is very unfortunate, but because the taxpayer shouldn't be supporting the high management compensation those guys are getting. And we're basically subsidizing the sale of cars to people who otherwise really wouldn't be able to afford a new car. Just go out and get a new car. Prices are crashing.
Yeah. I mean, government motors, General Motors, if you look at any of the city, state, federal automobiles that you and I pay for, they're all General Motors, or a significant chunk of them is General Motors. A very significant piece of it, of that prize. So, it's they can't sell them. That's the bottom line. There's nobody to buy them. Everybody's saturated in debt, and it is what it is. I mean, so if you're looking for the collapse, just look out your window. Look at some real numbers. You'll see it.
Wanted to sort of circle back to the topic of gold, because I happened to see a couple articles, at least one on Seeking Alpha over the weekend, where the writer was talking about sentiment or the technicals in the gold market, and they referenced the Commitment of Traders report, which is published on Friday, but it's for trading through the previous Tuesday. So by the time the Commitment of Traders report is issued on Friday afternoon, it's already 3 days old. So it would reflect the trading activity on the Comex from the previous Wednesday through Tuesday last week. And then it's issued on Friday. I mean, it's idiotic, and they do it on purpose, because it's another way to just say, oh, see, we're transparent, we release the data. Well, yeah, you release it 3 days late. And I had, when I looked at it, I was kind of late, and I was only halfway thinking, and I'm like, oh, wow, the bullion banks massively increased their short position and their net short position, and the hedge funds piled into the long side. And I was like, oh, well, the way this is set up now, the net short position for the bullion banks is pretty high, very high, as a matter of fact, especially relative to the amount of open interest. And then I woke up this morning, and I was like, wait a minute. The open interest was almost 450,000 contracts in the Commitment of Traders report issued Friday afternoon, when in fact the open interest as of Friday morning, before Friday's activity, open interest was down to about 415,000 contracts. So the point being is, we had this massive liquidation in open interest last week between Tuesday and Friday. So Wednesday, especially Wednesday and Thursday. And there's no question, given that the price declined during those days, that the bullion banks covered their short positions. And it goes back to this idea that Bill Murphy first pointed out, which is that, it's interesting that they slammed the gold market so they could get their shorts covered, but they're doing it because, if it was last in, first covered, they're covering at a loss. And you have to wonder why they're doing it. So yeah, as of the business open on Friday, the open interest would have been just under 415,000 contracts. So you had a 35,000 contract liquidation in the open interest, which would have more than covered the amount of shorts that the bullion banks had put on through Tuesday last week, which was about 25,000, an increase of 25,000. So there's no question they covered their shorts last week. And so to try and issue any kind of commentary about the gold market based on the Commitment of Traders report is useless.
Yeah, well, they plan it that way, just like you said. I mean, you're looking at a report that you're reviewing it on Friday, and it's going back 9 days, or at least 8 days.
Well,
it's 8 day old information. I mean, it's only
3 to 8 days old. Yeah.
Yeah. I mean, if you look.
Well, the funny thing is, it's like my first reaction last night was, oh, geez, we should probably hedge some of our positions in the fund, and because that Commitment of Traders report suggests the market's going to be bearish for a few days. And then I woke up this morning, I was like, wait a minute. That already happened. And none of us had the ability to make trading decisions based on the information conveyed in that Commitment of Traders report, because we didn't see it until Friday. But guess what? The guys who run the Comex see that data every day. They know exactly what the net positions are every day.
Every hour.
And it's ridiculous. It's the most corrupt situation. It's the most corrupt market in the world.
Yeah, I mean, they're reviewing it as they're coming in.
You're gonna be exposed to less corruption in the black market down in Venezuela than you are on the Comex.
That is a sad statement right there. I mean, how much worse do you think that it can get from here, Dave? I mean,
A lot worse.
it seems pretty ugly at this point.
A lot worse.
I'm just glad I don't fool with any of that. I just take the physical off the market, and that's it. That's all that I'm concerned with.
That's right. And I think for people who have money to invest in precious metals, now's the time you got to do it. You want to do it when premiums are low. And I got an email from ST Bullion over the weekend, and they're offering Silver Eagles at
225 over spot.
225 over, and I plan on buying some more today. I don't care what the price of silver is doing. If it's below $20, I'm going to buy a little bit of, I'm going to add to my Silver Eagles slowly every week, especially when the premiums are this low.
And it seems like both gold and silver they were beat down overnight, but they seem to be rallying this morning, and they're back up to where gold is higher than it closed on Friday, and silver is back to the actual close Friday afternoon. So
gold is $8 off its lows since 6 a.m. yesterday or 6 p.m. yesterday. So and it gets back to this idea that the metals are behaving a little bit differently now. The price takedowns are very short lived.
Yes.
Yeah. And the bounces seem to be scratching out higher highs. So, whereas a week ago everyone's talking about, 1250 is the key technical level. Well, gold is kind of holding above 1250 now. I mean, it's getting hit below it, and then it bounces right back above it.
Yep.
So, I still think that despite what we're seeing in bullion sales, because again, it's just such a tiny part of the market, the minted bullion sales, I still think that there are physical supply issues for large buyers.
Yeah, that wouldn't surprise me in the least. I mean, we've been reporting that for quite some time, and the way that the digital market is acting, I mean, that has to reflect what's going on in the physical market to a degree. And if there's more physical coming offline, then that price is going to be reflected. I mean, right now, the premium, according to did the system collapse, is the premium to physical to paper is just over $9. It's like $9.39 an ounce. It got up to almost 20 with 18 and change on Friday. Now, is it going to get back up to that 18 by the time the day closes? It could. It very well could, which that is, as we've discussed before, that's a direct reflection of the tightness and the demand for physical on the Shanghai Gold Exchange, period. And so when you start looking at that I look at that every day. I don't talk about it much because there's not much going on with it. But when it gets up in that $20 range, that definitely has my attention.
Sure. Yeah, I monitor that. And I just wanted to circle back really quickly to this minted bullion issue, and we can wrap it up. There's a colleague of mine who emailed me late last week who said that he knows a big bullion dealer who told him, retail bullion sales are way down. It's obvious. But he said what's interesting is that he's getting several very large orders from very wealthy people who are they're not they're off the radar types, and the thesis and the recurring theme is that these are people who want to move their convert their cash in the banking system into physical bullion and get their start moving their wealth out of the system. And I thought that was kind of an interesting commentary.
All right. Well, I guess that's as good a spot as any to wrap it up. And I guess we'll pick it up on Thursday and see where we stand.
Sounds good to me.
All right, buddy.